So in this video, I'm going to show you how I forecast the future free cash flows for a company. I have four models. It's either the median, the average, the min, and the max. Those are the four models. So I'm using Molson Coors model, the one I just recently did. And I use the median model for this company. And the median means it looks at the median change in the revenue to calculate the future revenue. The same thing to calculate the future net income and future free cash flow. Let's look at revenue to start because it's the easiest to explain. The way I calculate future revenue is a change from prior 4 years of revenue. In 2016, they had 4.9 billion of revenue, and that increased to 11 billion. That's a 55% increase. Then it decreased 2.2% the next year. Then it decreased 1.8% the next year. So in the median model, all I did was I took the median change, which is negative 1.8, because median is just middle number. And the way I forecasted the 2020 revenue was I took the 10.5 billion, which is this formula right here, 10.5 billion times 1 plus the median, and that comes out to 10.4 billion. So I'm assuming the change is negative 1.8% each year. And you can see that's the change. Same thing here. This formula, you see it matches 10.2 billion. So it's 10.4 billion times 1 plus the median. Now if I change this to 2, it's going to take the average. So the average is 17.2%. That's the average change for 3 years, 17.2%. Model will take the 2019 revenue of 10.6 billion times 1 plus 17%. So the revenue increases at 12.4 billion. Then the following year, 14.5 billion, which is right here. And if I change the model to the min, the forecasted revenue would be negative 2.2% because that's the minimum of the three numbers. So it's right here. And then it would take the 2019 revenue times 1 plus negative 2.1%. So it comes out to 10.35 billion, the 2020 expected revenue, and it decreases every year 2%. If I took the max, the maximum change is 55%. So each year the revenue increases 55%. So you can see the calculated stock price is $8,800. So that means the revenue of 2020 would be 16 billion, 25 billion, 39 billion, 62 billion. I usually don't use the min and the max. I prefer to use the median because I think that makes the most sense, but sometimes it doesn't work, so I use the average. But I've also used the min and the max on certain companies. In this case, the max wouldn't work because it's just way too high. But in certain companies, the max works better than the median and the average. I have to look at a lot of the other factors. In order to decide which model I use, I do look at the industry and the company. And I also obviously have to look at the numbers too. If it doesn't make sense, I can't use it. But I always try to use the actual numbers. I don't make up numbers. A lot of analysts use expected numbers that they come up with. I try to use actual numbers almost all the time. There have been instances I had to alter the numbers a little bit just to match certain expectations. Like if a company was obviously going to grow at a really fast rate, I might have to do an alternative to these models. Or if a company was going to really slow down, like they were heading into a lot of trouble and they were really struggling, I may also have to use an alternative. But it's very, very rare I do that. So to get the expected net income for 2020, I took the revenue, the 2020 expected revenue of 10.4 billion times these numbers. And for the median of these numbers, it's 11.6% because you take the middle two numbers and take the average. So the average of the 10% and 13% is 11.6%. And to get the 1.2 billion, it's just 10.4 billion times 11.6%. If I change this to a 2, making it the average, it would then take the average of these 4 numbers, which is 16.5%. And then this revenue will be higher because it will be the average of the revenue. So it'll be 12.4 billion times 1 plus 16%, which is 2 billion. I do the same thing for 2021, 22, and 23. It's the projected revenue times these 4 numbers, whether it's the median, average, min, or max. To get the future free cash flow, I take the future net income. So for 2020 free cash flow, it was the 2020 net income of 2 billion times these 4 numbers. And I would do the same thing. It would be the median, min, average, or max, depending on which model I used. So that's how I calculate the estimated financials on my models. Now, to get the terminal value is a little more complex, and I'm going to save that for another video. So thanks for watching.